All right, good morning, crypto fans. I did a video on Mari yesterday and got a request to do CLSK, so I'm just going to cover that really quick. So what I'm going to do is just give two different projections based on Elliott wave theory. And what I did here was similar to what I did with Mara, and I just confirmed that CLSK is in fact following the Elliott wave theory, uh, comparing it to the last cycle. And what I do see here is a 5-wave structure. Usually, once again, the 3-wave structure is a larger degree and has identified 5 waves within the 3-wave structure, which I went ahead and counted here. So you can see a 1, 2, 3, 4, 5, ABC 1, 2, 3, 4, 5, ABC 1, 2, 3, 4, 5, right? So I would say at this point from chart history that we are following Elliott wave theory. And what this would say is we have an ABC correction. This is a 1, 2, and this is a 3, 2, the largest degree, right? Now the issue that we're having here is I see two path projections similar to Mara. And the caveat here is really where we're at in this cycle so that we can identify how long the drawdown is going to be, right? So this would be, and when I speak in the terms of the bearish thesis, it's more of the delayed thesis. Now, given that this cycle has proven itself, I believe wholeheartedly that this cycle will result. It's just when, right? Does it happen in the next 4 to 6 weeks? Do we start the uptrend in the next 4 to 6 weeks, or is it the second half of the year type situation? So this would be the shorter term projection. And what I would see here is I can count 5 waves here, right? And then 5 waves here and 5 waves here. So the situation that we're running into here is this wave 1 of the larger degree? And then we're going to have 5 waves within the wave 3 similar to this one, right? Which would then account for this gold Elliott wave theory. Or is it something like this where we've actually already completed 5 waves and this is just wave 1, right? It's this wave 1. So that's the $1 million question. So let's go back here and let's just try to break down the sub count so that we can identify where we actually think we are. So I can see 5 waves here and I see an ABC structure here. I see a wave 1, 2, 3, 4, 5, which is this one. I'll just delete this so that we can kind of see clearly as I go through it. Then I see an ABC structure, which is what I see here. I also see 5 waves right here. 1, 2, 3, 4, 5, right? Which could be this wave 3. And then we're seeing an ABC structure. Now, the issue that I have here is I do see an ABC structure here on the lower time frame. Right? That's 3, 3, and then 3. So what this tells me is if this is an ABC structure and these waves are true, this should be wave 4. And the rules of Elliott wave theory says wave 4 should not exceed past 50% retracement. Now, given this is usually more accurate in the larger market cap stocks, but in the smaller market cap stocks, I see a little bit of fluctuation, and quite often it goes like in the middle of 50 and 61%. But if that were to happen, it kind of starts breaking the current chart that we do see. Now, in a perfect world, what we would see here is an ABC structure, and now this is a wave 1 of the finishing of wave 3. So what I would like to see here is this low hold, and we see kind of like a 1, 2, 3, 4, 5. I don't know what's up with that. 1, 2, 3. What is going on with that? Anyways, I'm not going to do that. 1, 2, 3, 4, 5, and that would finish wave 3. That's what we need to see for the short-term bullish thesis. Now, you can also be cognizant that we are currently also developing a massive head and shoulders. So we have to be cognizant that if we trip this low, that head and shoulders is going to play out, and this actually could be an ABC correction, which is for the bearish thesis. And if that were to happen, a measured move, by itself could take us, you know, basically to 1288. But the thing is, when you get down here and you start looking for a bottom, I prefer to see a volume profile. You know, we start getting into a volume desert here, at least on this wave up, in which realistically, you know, we could find support in this support area, which if I was to be a betting man, it would probably be in this. This looks like the most consolidation, right? So even though the measured move is to the 61% retracement, you know, you have to be a little bit skeptical on that. So for the short term, to where we can get a response in the next 4 weeks, what we would like to see is us not trip this low. As long as this low holds, this is a good risk to reward, right? Like I bought some this morning and I have a stop loss about 5 cents under this, just because if we trip under it, then I'm not going to fret about it. I'm just going to get over it. So this is the short term, and if we do hold this low in the short term, then you know these are the projected prices over the next 2 to 4 months, which could be wave 3 could end around 35, pull back to like 22, 24, and then end up around 40. Now some of the times if the sentiment changes, these prices can change, right? If we become hyper bullish, then these can get a little bit outrageous, but this is the baseline based on Elliott wave theory. So this is the next 4 to 6 week projection, price range, price action that I want to see. And now let's go to the delayed response. So what I see here is an obvious 1, 2, 3, 4, 5, right? Now the question is this a one, two, three, four, five, and this is going to be wave 1 to the larger degree, and then we see a 61% retracement and find ourselves up there somewhere, right? Which could very well possibly happen. Man, my stuff is not working good today. But anyways, so if this is a 5-wave structure, what this would tell us is this is an ABC structure, which could kind of align with even the information that we're receiving today, right? Like CPI was came in hot a couple days ago, and then PPI came in terrible today, combining that with a decrease in retail sales. You know, that's the formula for not only a recession, but stagflation. And stagflation is something that could literally crash the market, right? So if that starts becoming the theme, price action is going to start, or the market's going to start pricing in that risk. And I believe that's already what's happening, right? Tesla's down 3% today. Everything's selling off. There's a lot of uncertainty. Now, we do have the FOMC meeting next Wednesday. And I think the market's going to really price in the risk until we get through that. And then based on what they say, it'll probably finally choose the direction of the market. But even then, I think up to that point, I think a lot of risk is going to be set in unless there's some type of bullish catalyst that happens overnight between now and then. So this would be the delayed response. If we've actually already completed 5 waves, and this is a wave 2 of the larger degree, we would see something like this where we see an ABC structure, right? We see this head and shoulders play out. This would be in a 3-wave structure all the way down here, right? Somewhere around here. We would see something like a 50% retracement, and we would see a measured move for wave C back down here, right? And if we were to do a 61% retracement, what in the world is going on with this? I think my mouse broke. Anyways, if we were to see a 61% retracement, it'd actually be something like this. All right, so we have to be very cognizant of that, right? I think the 1450 is a more defined risk on Mora that can give us a lot better of an understanding of where we're at, but also just this pivot low right here, right? As long as we hold that, that's the 50% retracement on the early bullish thesis. So this 1481, and even though it's a really red day, we're down 11%. It's a really red day, and we got to just see where we end up here. But I think if we trip this head and shoulders is going to play out, and it's going to be an accelerated move down. Now, do keep in mind, failed head and shoulder playouts are the strongest upside moves. You can see it in Nvidia, previous Tesla moves, everything. So if we actually break down here and for some reason we start blasting off and we break above this candle high, then I would say that's um, a failed breakdown, and it's that's going to play out. But I wouldn't risk that because the head and shoulders is typically the more probable outcome, especially with the sentiment right now of this week of the data that's came out, and it's something we have to be aware of. But these are my two price projections. Both of them are ultimately bullish. It's just how large of a drawdown do we have in the short and medium term, right? Is this the bottom? Do we rally from here for the 4 to 6 week bullish thesis? Or do we have a summer drawdown, a fall drawdown, and sometime in Q3, Q4, we bottom out for the wave two, ultimately to finish the cycle and going into 2025. So that's something that we want to be cognizant of, be mindful of, and manage your risk up to that point so that you don't find yourself um, putting money too early and then not having or being able to do anything with it, especially if you're using margin. So this is CLSK. You can check my video for Mara. I even have a Chinese thesis, which I think their market is bottoming and it actually might disconnect from the US market. Check out my videos and let me know what you think. Subscribe, comment, do all that stuff if you want. Anyways, have a good day.